Hi Palm, it's Mark. I thought I'd just put a little video together just to show you what I can see. I'm actually fascinated by the whole thing, markets. It's quite exciting. Um, Maybe it's tickling the gambling gene, which could be a real problem. But like I said, I would give you a quick update on what I can see. So I've brought up the S&P 500 index. This is on the daily time frame. You have to excuse my computer beeping at me. But you can see the momentum is most definitely to the downside with these giant red dildos. Yeah, we've had a bit of a bounce. In fact, let me just zoom in so you can see the daily. This is just the daily chart. I've got a ribbon. This is the sort of ribbon of all the moving averages, the sort of 55, the 10, the 21. But the only two I really look at are these two, which is the yellow, which is the 200 period exponential moving average, the EMA, and the 100 exponential moving average. And these two is really what it's all about. You can see the faster moving average, the 100, is crossed the 200, which is indicative of a bear, sort of a death cross, and you can see the sort of result of that, which is more continued movement to the downside. This is really kind of when you look at it, you can see the market's moving down. It has a pullback and starts trending back downwards. Bit of a pullback, trends back downwards. Bit of a pullback, trends back downwards. Bit of a pullback, and onwards, pullback, onwards. And today we're having a pullback. So the trend is daily. The daily trend is downwards, and every time we have a pullback, it is rejected, and the trend is continuing, and that's not surprising with the current state of events in the world. The end of the world is nigh, coronavirus, etc., etc. I believe this has been on the cards for a long time. If I go back in history, you can see how, excuse me, you can see how the trend has been steadily moving upwards. Every time there's been a pullback on a upward trend, it's pulled back into the 200 moving average, and then it's been rejected, bounced back up, and then it's come back, and you can see how it's been rejected every time, back up, and then it's hit the 200 moving average, and green dildos all the way to a peak. And you can see here on the 20th of Feb where we started to hit the big capitulation, and once the 200 EMA broke, and you can see here that there was a fight. Each one of these candles is a day, so there was a fight to try and get back above this 200 EMA, but unfortunately the bears won, and giant red dildos all the way down into the abyss. So that's where we are on the daily. Now I know that doesn't really help you because you're in a short, and you can see that the market today has pushed back up. The trend is your friend until it isn't. So I want to bring up this second indicator. I'll just come out of this. So let's have a quick look at this indicator here. So yes, it looks a bit messy, but I just want to show you the green cloud. So we're looking at this green cloud. Now this is the money flow, and you can see that the money flow was high, and it's just dropped like a stone, and we've entered into the red. This is the zero line. We've now entered into the red. So it's and we've only just entered into the red. So we are really just entering into the red at this kind of level here. In fact, where I've put on this green line. So we are where we are now. This line is what is called the stochastic RSI, or there's two lines: the purple RSI and the red thicker line, if you like. That's a stochastic, and they both took a big dip here, and really it's just continued downside with pullbacks and then momentum just being resumed. Now the blue waves represent momentum waves. You can see here how the blue waves are all above the zero line, and the price has steadily and consistently moved up, a nice trend upwards. But as you can see here, there's now a giant negative momentum, and it's started to slow down. So it has slowed down. We have a green dot here printed on the daily. The money flow, like I say though, is in the red. So we would have to see where this takes us. You can see here this green doji is a bit of a well, it's being a doji candle, indecision. However, the market decided to continue down, and you can see that no matter what stimulus the Fed give us, including infinity, quantitative easing infinity, which has probably given us this pump here. We'll see how far that gets us. Let's just have a look at the lower time frames. I don't know if you're swing trading, I don't know if you're day trading. You find that most day trades that go against you turn into swing trades, but sometimes you just got to let it go if it goes against you too far. So let's go down into the 12-hour, have a quick look. You can still see here we're living below the averages, below this ribbon. Money flow is still red. RSI is still low, around about 10. So we're still in the red. So still, despite the pullback, we're just entering into this overhead resistance, which would, if rejected, resume the current trend, and the trend is your friend until it isn't. The lowest time frame I'll go down to is the 4-hour to give any weight to. As you can see, we're just entering into these overhead resistance levels. The money flow is still cruising downwards overall. The momentum waves, yes, there's less negative momentum, but it's still very much money flow to the negative. We could be rounding off, but I would wait now until the 4-hour closes. There's another 2 hours before the 4-hour closes. In fact, we'll go down to the 2-hour, which is about to close, and we'll just have a little look at the 2-hour to see if there's any hope that we might continue with the trend. In your case, if you're still in that short, back to the 2-hour. So as you can see, the 2 hours telling us it's flat, so still no decision. We are living under the zero. All these momentum waves are certainly all kind of equal size, all on the negative side of the zero line. The RSIs started well. There's a little upturn, but yeah, living in the what's called the bearish control zone, and the trend is down. And you can see here that every time we've pulled into this cloud, we've been rejected. Pulled back into the cloud, rejected. Pulled back into the cloud, rejected. Back into the cloud, rejected. Back into the cloud, and well, let's see where we go. Let's go down into the 1 hour. Okay, in the 1 hour, maybe you can see here how the money flow is maybe starting to climb up. It has started to turn here. The RSI has started to turn up. We haven't quite broken the 100 EMA. You can see here how it was tested. It broke, but it didn't sustain and didn't close any substantial candle. These are just, like, say, 1 hour fuckery candles, and it's been rejected back down and never broken the 100 since. And you can see here that it looks like there's a initial rejection. So yeah, let's have a look down at the 30. So yeah, you can see 30-minute we've broken it, but so that's what, an hour and a half worth of candles. These blue triangles dictate a reversal, a possible reversal in the trend. You can see the money flow is still in the red, even on the 30-minute, and the RSI is starting to turn, possibly for a rejection, and probably this upwards momentum is starting to curl round, possibly for more red dildos of doom. So your short may very well pan out. I don't know if you've closed it yet, but that's what I see. Of course, none of this is financial advice. Just to go up onto the higher time frames, just have a quick look. Let's have a look at the 2-day. So you can see the 2-day, we're in green, still in green. We have printed a green dot on the 2-day, so which is nice, but we are living well below this this average. I put this green line on here just to show you the previous time we were at this level, which was back in December 18. So we are at December 18 levels on the S&P 500. Yeah, long term, probably a buy. Short term, however, let's have a quick look on the. So, like I said, the negative momentum is certainly starting to turn, but each one of these candles is, is 2 days, and we've still got a day and 5 hours before this candle actually closes. Let's have a look at the 3-day. Now the 3-day only has 4 hours left on this candle. As you can see, it was rejected quite heavily from this level here, but it's still a red candle, and you can see that we still have maybe more downside to come. There's certainly, this is the negative momentum, living below the cloud. The averages, well below the 200 moving average on the 3-day. Yeah, and actually that is a lower low, so quick look at the 5-day. Okay, the 5-day is obviously printing bullish candle. We are in a green candle, but it's a 5-day candle, and there's a lot of time. There's still 3 days to push on that candle. And on the weekly, you can see we still have plenty of room plenty of negative momentum here. Let's go on the 2 weeks. So as you can see, the 2-week candle, it's bounced, it's hit this 200 EMA on the weekly, on the 2 weekly. Yeah, like I said, a long-term probably buy, especially with Trump at the helm. You're in a short, that doesn't really help you. A quick look at the monthly. Obviously, we're a little bit of time away from the end of the month, but we're not that far away. Could we possibly hit this? Yeah, unprecedented times. Maybe we'll come down and test this 200 EMA on the weekly. You can see it's done it before. In fact, it went quite a way past it. It's tested it again here, tested it again here back in October 2011. Will it test it, the coming weeks ahead? Remember, each one of these candles is a month, so it could be, a long way from here. We're still in the green, but you can see how we are cruising, pretty much to the downside. We've got a red skittle. The RSI has certainly took a turn, and the stochastic has took a turn for the down, but we could, we're still at sort of a 60 on the stochastic, and we're at a 40 on the monthly on the RSI. Let's just confirm that. Yeah, so 41 and a 60 on the stochastic, so there is still room to the downside on the monthly. So that's where we are. That's what I can see right now. Hope that helps you. Let's see where we are. Give it 4 hours. See where we close. We've now closed the 2 hour. Quick look. We've closed the 2 hour. Got a little bit of a red candle showing. So we've closed the 2 hour. we now started to see a little bit of red. Still very much flat. So indecision. We could be printing a doji, split the difference, go on the 3 hour. A green candle, sorry, a green skittle is being printed there on the 3 hour. But like I say, let's wait and see where this 4 hour candle closes. At the end of the day, it's still, even if it's still a lower high, or should I say a higher low. Stay safe out there, my friend. Still cruising to the downside, and we'll see where we end up at the end of the next couple of hours. Take care, Pom. Bye.